I need to confess something. For 2 years, I thought I was smarter than everyone else. While my friends were grinding 9-to-5 jobs, making maybe $60,000 a year if they were lucky, I was making their yearly salary in a single week, sometimes in a single day. I had cracked the code. I had figured out the system. I was a genius, or so I thought. The truth? I was just lucky. And luck, in the world of leverage trading, is a ticking time bomb. They gave me a button that said 50 times leverage. I pressed it. They gave me access to futures, options, margin accounts. I used them all. And for a while, it worked. My account grew from $50,000 to over $8 million in less than 2 years. I felt invincible. Then came the margin call, and I realized something horrifying. I never actually owned any of that money. I was just borrowing it. And when you borrow from Wall Street, they don't just want their money back. They want everything. My name doesn't matter anymore. But 2 years ago, people in certain finance circles knew me as the kid. I was 27 years old when I opened my first brokerage account. I wasn't born into money. My father was a high school teacher. My mother worked as a nurse. We lived in a modest 3-bedroom house in suburban New Jersey. I went to a decent state university, graduated with a degree in economics, and landed a job at a mid-sized insurance company making $52,000 a year. It was fine. It was safe. It was boring as hell. Every morning I'd wake up at 6:30 a.m., put on a cheap suit, commute an hour to Manhattan, sit in a cubicle, and stare at spreadsheets until 6 p.m. Then I'd commute back home, eat dinner alone, watch Netflix, and do it all over again the next day. This was my life. This was everyone's life around me, but I couldn't shake the feeling that there had to be more. I started reading books about investing, about trading, about people who made fortunes in the stock market. I consumed everything I could find: Benjamin Graham, Peter Lynch, William O'Neill, Ray Dalio. But the book that changed everything was about a different kind of trader, a day trader, someone who didn't invest for years. They traded for minutes, sometimes seconds. The book talked about leverage. At first, I didn't understand it. How could someone with $10,000 control $500,000 worth of stock? It seemed impossible. Magic. A trick. But it wasn't. It was leverage. Here's how it works. Imagine you want to buy a house worth $500,000, but you only have $50,000. The bank lends you the $500,000 rest, $450,000. You now control a $500,000 asset with only $50,000 of your own money. If the house value goes up by 10% to $550,000, you've made $50,000 on your $50,000 investment. That's a 100% return. But here's the catch. If the house value goes down by 10% to $450,000, you've lost your entire $50,000. You're wiped out. That's leverage. It magnifies everything, your gains and your losses. In the stock market, they don't call it a mortgage. They call it margin. And the leverage isn't 10 times like a house. It can be 50 times, 100 times, even 125 times in the crypto world. I was mesmerized. I started small. I put $5,000 into a brokerage account, money I'd saved from 3 years of working and living frugally. My plan was simple: trade during my lunch break, keep it conservative, and see what happened. For the first month, I didn't use any leverage. I just bought and sold stocks with my own money. Some days I'd make $50. Some days I'd lose $30. It was slow, boring. Then one day I saw a pop-up on my trading platform. Apply for margin trading. I clicked it. Within 24 hours, I was approved for 4 times leverage. That meant my $5,000 could now control $20,000 worth of stock. I remember my first leverage trade like it was yesterday. It was a Thursday afternoon. I saw a tech stock that had been consolidating for weeks, and I thought it was about to break out. I bought $20,000 worth of shares using my $5,000 plus $15,000 of borrowed money. The stock went up 8% that day. I made $1,600 in one day on a $5,000 account. That's when everything changed. Over the next 6 months, I couldn't stop. I'd wake up before the market opened, check pre-market futures, plan my trades. During lunch at work, I'd execute. After work, I'd study charts until midnight. My account grew steadily. $5,000 became $12,000, then $25,000, then $50,000. I quit my job. My parents thought I was insane. My friends thought I was reckless, but I didn't care. I was making more in a month than I used to make in a year. And I was just getting started. When my account hit $50,000, I applied for higher leverage. They approved me for 10 times, then 20 times, then 50x. 50 times leverage means that with $50,000, I could control $2.5 million worth of assets. Think about that for a second. $2.5 million. I could buy and sell positions worth more than most people's houses. And I only needed $50,000 to do it. Of course, there's a catch, and it's a big one. With 50 times leverage, if your trade moves against you by just 2%, you lose 100% of your capital. You're wiped out. Your account goes to zero. But I wasn't worried about that. I had a system. I had rules, stop losses, risk management, position sizing. I was smarter than the average gambler. At least, that's what I told myself. By the time I was 28, my account had crossed $1 million. $1 million. I moved out of my apartment and into a penthouse in Tribeca. I bought a Porsche 911 Carrera. I wore Rolex watches and Tom Ford suits. I dated models. I partied at clubs where bottles of champagne cost more than my father's monthly salary. People asked me for advice. "How did you do it?" they'd say, eyes wide with admiration. I'd smile and say, "Discipline, hard work, pattern recognition." But the real answer, leverage and luck. I was essentially gambling with borrowed money. And for a while, I kept winning. My friends from college started reaching out. "Dude, teach me how to trade." I'd send them a few tips, and they'd open accounts. Some made money, most lost. One of my old roommates put his entire savings, $30,000, into a single leveraged crypto trade I mentioned casually at a bar. He lost it all in 3 days. He didn't talk to me after that, but I didn't care. I was too busy flying to Miami for the weekend, staying at the Fontainebleau, betting $5,000 hands at the blackjack table just because I could. Money, I learned, changes you, not just externally, but internally. You start to believe you're special, chosen, untouchable. You forget that the market doesn't care who you are. My peak came 18 months after I quit my job. My account hit $8.2 million. $8.2 million. I was 29 years old. I took a screenshot of my portfolio balance and stared at it for an hour. I couldn't believe it. I'd gone from a $52,000 a year insurance analyst to a millionaire many times over. I called my parents. My dad answered, "Hey, Dad, just wanted to let you know I'm doing really well. There was a pause. That's great, son. Are you happy? Was I happy? I didn't know. I hadn't thought about it. I was too busy trading, too busy chasing the next win. Yeah, Dad, I'm happy. But I wasn't. Not really. I was addicted. Addicted to the wins, addicted to the adrenaline, addicted to proving I was smarter than everyone else. That weekend, I went to a rooftop party in Manhattan. Someone introduced me to a hedge fund manager. So, what do you do? He asked. I trade, I said, trying to sound casual. Oh yeah? What's your strategy? I told him. Momentum trading, high leverage, quick in, quick out. He smiled, not a friendly smile, a knowing smile. How long have you been doing this? About 2 years. He nodded slowly, swirling his whiskey. Kid, let me give you some advice. The market gives and the market takes. And it takes faster than it gives. You've been riding a bull run, but when the tide turns, leverage doesn't just hurt you, it annihilates you. I laughed it off. I've got stop losses, risk management. I'm not like those other idiots. He looked at me almost with pity. They all say that. I didn't think much of it at the time. I was invincible. I had $8 million. What could go wrong? Everything. It started on a Monday. The market opened and immediately dropped 2%. Not a big deal. Markets fluctuate. I'd seen this before, but then it kept dropping. By lunchtime, the S&P 500 was down 4%. My positions were bleeding. I had $8.2 million, but I was leveraged 50 times. That meant I was controlling over $400 million in positions. A 2% move against me meant I'd lose $8 million. All of it. I started closing positions. Fast. But the market was moving too quickly. The sell orders weren't filling at the prices I wanted. Slippage. Liquidity evaporated. By the end of the day, my account was down to $5 million. I'd lost $3.2 million in one day. I didn't sleep that night. I sat in front of my monitors watching futures, trying to figure out if the market would recover. It didn't. Tuesday was worse. Another 3% down. My account dropped to $2.1 million. Wednesday, another 2.5% down. My account, $400,000. I'd lost over $7.8 million in 3 days. And then came the call. It started on a Monday. The market opened and immediately dropped 2%. Not a big deal. Markets fluctuate. I'd seen this before, but then it kept dropping. By lunchtime, the S&P 500 was down 4%. My positions were bleeding. I had $8.2 million, but I was leveraged 50 times. That meant I was controlling over $400 million in positions. A 2% move against me meant I'd lose $8 million. All of it. I started closing positions. Fast. But the market was moving too quickly. The sell orders weren't filling at the prices I wanted. Slippage. Liquidity evaporated. By the end of the day, my account was down to $5 million. I'd lost $3.2 million in one day. I didn't sleep that night. I sat in front of my monitors watching futures, trying to figure out if the market would recover. It didn't. Tuesday was worse. Another 3% down. My account dropped to $2.1 million. Wednesday, another 2.5% down. My account, $400,000. I'd lost over $7.8 million in 3 days. And then came the call. At 9 a.m., they liquidated everything, every stock, every option, every future. Gone. My account balance negative $1,723,482. Negative. I didn't just have zero, I had less than zero. Within a week, I got a letter from a collections agency. They wanted their money. I hired a lawyer. He told me I had two options: declare bankruptcy or try to settle. I chose bankruptcy. The penthouse gone, the Porsche repossessed, the Rolex sold. I moved back in with my parents. At 29 years old, I was sleeping in my childhood bedroom, staring at the ceiling, trying to figure out where it all went wrong. Here's what they don't tell you about leverage. It's not a tool. It's a trap. The financial system is designed to make you think you're smarter than you are. They give you access to 50 times, 100 times, 125 times leverage because they know that statistically, most people will lose. And when you lose with leverage, you don't just lose your money. You lose money you don't even have. The brokers, they don't care. They make money on every trade you make, win or lose. In fact, they make more money when you trade more often, which is exactly what leverage encourages you to do. The system is rigged, not in some conspiracy theory way, but in a structural way. Retail traders, people like me, are the fuel that keeps the machine running. We're the liquidity. We're the exit strategy for the big players. When I was making millions, I thought I was winning, but I was just lucky. I was surfing a wave that was bound to crash, and when it crashed, the leverage didn't just hurt me, it destroyed me. It's been 3 years since the margin call. I'm 32 now. I work a normal job again. I make $65,000 a year. I live in a small apartment in Queens. I drive a used Honda Civic. I don't trade anymore. Sometimes late at night, I think about what I had: the money, the lifestyle, the feeling of invincibility. But then I remember the phone call at 3:47 a.m., and I remember the lesson I learned the hard way. The market doesn't care how smart you think you are. It doesn't care how much you've studied. It doesn't care about your system, your strategy, or your confidence. The market just is. And leverage is its weapon. You might be thinking, well, I'd never be that reckless. I'd never use 50 times leverage. But here's the thing. You might already be playing this game without realizing it. Do you have a margin account? Do you trade options? Do you invest in leverage ETFs? If so, you're using leverage. And the same rules apply, the same risks, the same potential for catastrophic loss. The financial industry wants you to believe that leverage is a sophisticated tool for sophisticated investors. But the truth is, it's a casino chip, and the house always wins. Here's the secret Wall Street doesn't want you to know. Leverage isn't designed to help you make money. It's designed to transfer your money to someone else. Every time you use leverage, you're essentially taking a loan from your broker. And just like any loan, there's interest, there are fees, there are terms. But unlike a traditional loan, with trading leverage, if your collateral, your account balance, drops below a certain threshold, they can take everything instantly. No warning, no grace period. It's called a margin call, and it's the most efficient wealth extraction mechanism ever created. When I lost $8 million in 3 days, where did that money go? It didn't just disappear. It went somewhere. To the people on the other side of my trades, to the market makers, to the brokers who collected fees on every transaction. My loss was someone else's gain, and that's the system. That's how it works. The most dangerous thing about leverage isn't the math, it's the psychology. When you're winning, leverage makes you feel like a genius. Every trade confirms your brilliance. Every gain reinforces your confidence. You start to believe you figured out something that millions of others haven't. You think you're different, special, but you're not. You're just lucky, and luck runs out. The problem is, by the time you realize this, it's too late. You're over-leveraged. you're overconfident, and you're one bad trade away from ruin. I've met dozens of traders since my crash. Almost all of them have the same story. I was doing great for months, even years. Then one bad week, and I lost everything. It's not a coincidence. It's the nature of leverage. My story isn't unique. Thousands of people go through this every year. Some lose $100,000. Some lose $10 million. Some, like me, end up owing money they don't have. But here's the bigger picture. Leverage isn't just a problem for retail traders. It's a systemic risk for the entire financial system. Remember 2008, the financial crisis that nearly destroyed the global economy? That was caused by leverage. Banks were leveraged 30 times, 40 times, sometimes 50 times. When the housing market crashed, they didn't just lose money, they imploded. And who paid the price? Taxpayers, regular people who had nothing to do with the reckless gambling on Wall Street. The same system that destroyed my life is the same system that destroyed the global economy in 2008, and it's still running today. In fact, it's worse now. Leverage ratios are higher, derivatives markets are bigger. The system is more fragile than ever. And when it breaks again, and it will, it won't just be traders like me who lose everything. It'll be everyone. If I could go back and talk to my 27-year-old self, here's what I'd say. Lesson 1. Leverage is not a tool. It's a gamble. No matter how much you study, how smart you think you are, or how good your system is, leverage amplifies luck, and luck always runs out. Lesson 2. The market doesn't owe you anything. Just because you made money last week doesn't mean you'll make money this week. Past performance means nothing. Lesson 3. Risk management isn't optional. I thought I had risk management. I had stop losses. I had rules. But when the market moves fast, none of that matters. The only real risk management is not over-leveraging in the first place. Lesson 4. Ego is your enemy. The moment you think you figured out the market is the moment you're most vulnerable. Stay humble. Stay cautious. Stay paranoid. Lesson 5. If it sounds too good to be true, it is. 50 times leverage sounds amazing until you lose everything. High returns always come with high risk. Always. Today, I'm rebuilding, slowly, carefully. I have a normal job. I save a little each month. I invest conservatively in index funds. No leverage, no options, no margin. It's boring, but it's safe. Sometimes I wonder what my life would be like if I'd never discovered leverage. Would I still be working that insurance job? Would I be happier? I don't know. What I do know is this: I'm one of the lucky ones. I didn't lose my life. I didn't lose my family. I didn't lose my sanity. I just lost money, a lot of money. But money can be earned again. Some people aren't so lucky. I've heard stories of traders who couldn't handle the loss, who spiraled into depression, who ended their own lives. That could have been me, but it wasn't. And I'm grateful for that. If you're reading this and you're thinking about using leverage to trade, I have one message for you. Don't. Not because you're not smart enough, not because you can't win, but because the game is rigged. The house always wins. And in the world of leverage trading, the house is Wall Street. They have more money, more information, more technology, more experience. You are not playing against other retail traders. You're playing against algorithms, hedge funds, and market makers who have spent billions of dollars perfecting their systems. And they want your money. Leverage is how they get it. So if you're going to trade, do it with your own money. Risk only what you can afford to lose. And never, ever use leverage. Because the button that says 50 times leverage, It's not a button. It's a trap. And I learned that the hard way.